Hello and welcome to Investment Insights for April 2023. I am Avani Ramnani, and I'm excited to share with you some of what's been going on in the markets and also our takeaways from what's happening. So let's get started. 2023 got off to a pretty strong start, and it was a trend that was continued from the end of 2022. So we're excited to see 2 quarters of strong growth. Of course, there were so many ups and downs that happened during the year, during the 2 quarters, and there were many reasons to panic. But investors who were in a diversified portfolio and continued to stay invested throughout these ups and downs were rewarded. As you can see, in the last 3 years, a diversified portfolio grew by 8%, which is an amazing number, especially if you think about what happened during these past 3 years. Going into the first quarter, growth stocks finally regained their lead after they had a challenging 2022. And international stocks continued their recent outperformance relative to the domestic US stocks. So those were both good things to see. Small company stocks, while they did start out pretty strong in the year, gave back some of the gains because of the news that came out of the banking segment. And there was a flight to more stable companies. And that was what caused the gains to be reduced in the small company sector. But overall, looking at the 3-year numbers, that's where we feel pretty strongly, and that message has been reinforced of encouraging investors to stay invested throughout the good news and the bad news in the market. The takeaways that we have for the first quarter, at least, is that there is a little bit of a concern, even though the stock sector has done well. Only about 20 of the largest stocks have accounted for 7.5% of the growth in the market, in the general S&P 500 index. And that is a concern, that this is not such a widespread phenomenon. Of course, the banking failures, with that came good news and bad news. The good news was that the stock investors expected the Federal Reserve to slow down some of the increases in interest rates, and that led to a decline in Treasury yields, which at least the stock investors view very positively. And now the challenge will be to see how do we avoid a more severe recession. With cash supply being curtailed, it becomes more difficult for companies to produce that next phase of growth, to invest money in that growth. So some of these projections for the year-end growth in the markets may be a little bit too bullish, but there is always reason to panic. There is always reason to be positive. And what we are emphasizing on, and as the previous page showed, that staying invested is key. Who would have thought, going through 2020, the height of the pandemic, that if you looked out in 3 years, a diversified portfolio would have gained 8 years annually. But that's the key to diversification, to that long-term growth, is to stay invested in the market throughout the difficulties of a year like 2020 and 2022. But as we come into 2023, we're seeing the fruits of that patience. So those are our takeaways and a quick update. Thank you for joining me, and I hope to see you next time. Take care.